Good afternoon, this is Sean Golding with Golding & Golding, here to discuss the basics of why you're one of the unlucky ones and your tax return was flagged and audited by the IRS. Now, at our firm, we focus primarily on international tax and offshore compliance, so that's what will make the focus of this presentation. In general, the chance of the IRS auditing you is low. You read the garbage online and people make it seem like everyone's going to get audited for any mistake that you ever make in the history of your life. It just doesn't work that way. The chance of audit is very low. Now, it does increase as someone makes more and more money. It just happens to be that way. Once someone crosses the $250,000 mark, the chance of audit goes up significantly. But it's still relatively small, but the chance goes up, okay? There are some returns that are more likely to be audited just in general, forgetting international tax for a minute. In general, if you're a W-2 employee and you don't have any Schedule A or other deductions, the chance of audit's pretty low because when it runs through the computer, nothing's going to pop up. If you have your own business, you're a consultant, you've got offices in 5 different locations, you've got 4 vehicles, it's just you and your spouse, maybe 1 employee, a few employees, and the amount of deductions seem high, they could totally be legitimate, and you may result in a no change letter, but the chance of audit goes up. So what are the most common reasons that someone's audited for international tax purposes? Let's go through 5 and then an extra bonus. So one of the most common reasons lately why someone would get audited for international tax is a Form 8938 mismatch. Form 8938 is used to report foreign financial assets under FATCA, the Foreign Account Tax Compliance Act. Under FATCA, foreign financial institutions report U.S. account holder information to the U.S. The foreign institution reports that you have 6 accounts with $800,000. Your Form 8938 shows 4 accounts with $200,000. It may result in what's called either a soft letter or an audit notice. On that same concept, when the foreign institutions report, they sometimes, not always, will also include income generated with the account. So let's say you've got an account overseas, it's generating $15,000 of interest. Your return, Schedule B, shows $900 of interest. That's going to lead to a soft letter or possibly an audit. A soft letter is not technically an audit. A soft letter is a soft-ish, it's still harsh language from the IRS, but it's just basically saying, look, we have this information on file. You provided this information. It doesn't match. See if there's a problem. And if there is, you should fix it before you're audited. One other very common reason why someone gets audited is the following. When someone has an FBAR reporting requirement, it's not just for accounts that you have the money or that you have an interest in. It's account holders, joint account holders, and even an account that you have signature authority in, which is common if you have an elderly parent that wants you on the account or family member, or as an employer, you're signed on the account to be able to sign for checks and other things at the bank. So if those people reported, but you didn't report, then there's the concern that the IRS has on file that you're a joint account holder. You're like, what's going on? I didn't know I had to report any of this, and suddenly you get an audit notice saying, hey, XY, well, they won't tell you who filed it, but they'll say on file we have proof that you're an owner or a joint owner or signatory on this account. How come you never filed your forms? There are some other little less common reasons why someone would be audited in the international tax realm, but they still happen. One is the high foreign tax credit. So if you earn income in a foreign country, generally you can claim that income, taxes you paid on that income as credit on a Form 1116 or 1118 if it's business related, right? Just dealing with individuals. So if you paid foreign taxes and you paid a high amount of foreign taxes, normally more than $50,000, it generally goes to what's called the exam unit at the IRS, which is a total headache. You start getting a bunch of notices. They want proof or confirmation that you paid it. Normally you have to get a stamped document from the country or whatever other documentation you may need. So that doesn't mean you did anything wrong. In fact, sometimes that happens and it turns out the taxpayer can claim more credits and they get money back. But baseline perspective, if you have a high foreign tax credit, there's a higher chance that you're going to be audited because it just technically, from a technical standpoint, goes to audits. Incomplete 1040X reasonable cause. So sometimes someone will get a penalty, or before they get a penalty, they want to try to avoid the penalty. They don't want to do streamlined or any other of the non-willful options. Instead, they just want to do reasonable cause. Technically, taxpayers shouldn't be penalized if they can show reasonable cause, and not willful neglect. So in order to do reasonable cause, it should be a pretty comprehensive, 2 to 4 page statement, depending on the facts and circumstances, case law, regulations, IRM, Internal Revenue Manual, sections or articles, et cetera, et cetera. Sometimes someone will just submit a 1040X and just write the term reasonable cause in there. That's normally not going to be sufficient, and that could lead to an audit or a soft letter. Normally that would lead to an audit from the IRS. And additional prior year continuing audit. So it's just the idea that if you're under audit in the current year, there's a chance, depending on what the outcome of that audit is, that the IRS is going to go back further and try to audit you for the prior years as well. If you're out of compliance and you want to get into compliance, or you've been penalized, there's various options available to you. There's voluntary disclosure for people who are non-willful or just cannot, for people who are willful or just can't certify under penalty of perjury that they're non-willful. When someone's non-willful, for sure, they have lots of different options available: streamlined domestic, streamlined foreign, reasonable cause, and delinquency. We have lots of information available on our main websites and our sub-websites. The main website is goldinglawyers.com. You can always reach out to our office, schedule a reduced fee initial consultation if you think it's appropriate. Again, my name is Sean Golding with Golding & Golding. Thank you for your time. Enjoy the rest of your day.